Just this morning I was putting all the numbers into my model. I took the afternoon off to watch The View. So I hadn't had the opportunity to go through the numbers until late last night and this morning. And there's a lot of impressive changes going on at Facebook in terms of growth. You know, we see a lot of the growth in users, and we kind of maybe expected that would continue but tail off as the company got more mature. But we've seen some important changes in the way that they do business. One that jumps out at me right here is, you know, when the company went public 2 years ago, we looked at the nascent payments business and thought, geez, if they can grow that beyond Zynga, this could be an important business far above the 15% of sales or so it is. That business has actually fallen. This company is much more advertising dependent, and the shift to mobile has been fantastic for them as opposed to the threat that it appeared to be when they went public 2 years ago.
So does it blow your mind? Do you remember when they went public, one of the biggest albatrosses they had was how are they going to get their head around mobile? And now they're the guys dominating in it.
Yeah, I think, you know, I was going to use the word gaming. I don't think they quite gamed the IPO, but I think that they were very forthright, maybe overly so in terms of warning that they had nothing going on mobile. In fact, they were working diligently on it. We later learned that Mark Zuckerberg actually wrote his letter to shareholders in the IPO filing on a mobile device. That seemed like a ridiculous thing when he said it at the time, but clearly that showed how much their focus was on mobile. So you got to a point now in the last quarter, mobile revenues up 24% sequentially. And that's a quarter where you would expect that kind of thing to be down. Mobile's now a majority of their advertising revenue, which it wasn't even a year ago as it's been growing. And the revenue per mobile ad has been increasing a lot.
Corey, I was looking at some research this morning showing that Facebook's EBITDA margins at roughly 81% are some of the highest any company of this size has ever reported. Google apparently may have reported the highest EBITDA margins of all back in 2009, but it was a one-off. And this research showed that when Google was Facebook's size, which is to say a run rate of some $12 billion a year in revenue, its EBITDA margins were like half. How is that to suggest that Facebook's ramping higher, or is it like Google ultimately going to have to live in a world of lower margins?
So look at the chart I'm showing right now. So this is from my own model, but this is the numbers they've reported.
I mentioned EBITDA margins, by the way. We're looking at the operating margins, which are slightly different, but nevertheless
slightly different.
Extraordinary.
And the reason I think this margin, the number I put up here, is important because this takes out the stock compensation expense, a non-cash expense that gets particularly weird around an IPO and starts to level out over time. You can see a really clear freaking trend there, and it's amazing. They did some things right around the IPO where they took some really big R&D charges. They spent vast fortunes on research and development in particular, and it obscured what might be happening or what they could do, and it made you wonder what they would do in the future. What they told us on the conference call last night and what those numbers show us is that the company's getting more and more profitable. That while it's still growing, while they're still hiring, while they're still building a new campus and everything else, and doing, of course, lots of acquisitions, there's sort of a cap on the amount of expenditures. In fact, they said going forward that their margins are going to look a little bit better than they'd been in the past. So a really powerful profit story here, just straight from the income statement. Again, taking out the stock compensation charges, which I think is the appropriate thing to do here. And it's not always the case, but I think in this case it is appropriate to show how strong this business is, how profitable this business is. Throw in the growth and then figuring out how to charge ads, to put up fewer ads, charge more for those ads, put them in the news feed, take them off the side of the page. It's a really powerful story.